Welcome back. You're watching NSE FinWiz powered by CNBC TV 18. We're today at NITIE in Mumbai. Sanjay, when we want to invest, let's say there are people here who do want to invest and diversify their portfolio, equities is another good avenue for them. But it's difficult for someone to just jump in and start investing in equity because I was speaking to a couple of people earlier. They've had some bad experiences in equity. What is a good way for them to get into equity so that they are in it for the long term, so that they get the best benefits out of that?
See, initially it has to, especially a crowd like this, you have to have a contingency fund. Once you start earning, you have to have a cushion for yourself. Beyond that cushion, whatever surplus you have, there are multiple avenues to invest into, and not directly into the stock market. I'll say I have multiple instruments like mutual funds, SIPs, you've got life insurance plans which offer you equity exposure to varying degree, right from 0 to 100%. So these avenues give you a very disciplined way of investing, and to a large extent taking the risk away from you, especially through SIPs, or a monthly premium payment of a life insurance investment plan. So these plans will save you from the jerks of the equity market.
Gaurav, when we talk about mutual fund, there is a lot of talk about index funds and exchange-traded funds. And under mutual funds, of course, there are other balanced funds, liquid funds. Shed some light on these multiple fund names, because people do get, multiple fund categories, because people kind of get confused as to what each fund is about.
Okay, so we need to understand that as of now in India, there are only 3 asset classes in which mutual fund puts money. One is gold, so you can buy gold mutual fund. You can either do it what is called as ETF, which is exchange traded funds. So these mutual funds get traded on the stock market, and the way we buy and sell stocks, you can buy and sell gold ETF, and these are backed by 100% gold. The fund has to keep 100% gold, which is with a custodian. So one asset class is gold. The second 2 asset classes, which is debt and equity. Now, when it comes to equity, obviously, as it says, it invests in equity and hence in stock market. So these funds invest in stock market.
Sanjay, let's talk about gold, because Gaurav was also, and you've also spoken about gold as a investment asset class. Now, recently in the last year and a couple of years, last few years, gold has just hit the roof. It's gone like really high. But so that's added people are really excited about gold now. How should they approach if they want to invest in gold? Because one thing about Indian households is we automatically invest a lot in gold through women's jewelry. But what about investing in gold ETFs or buying, physical gold to keep?
I think Gaurav shared about this, especially about the ETFs. You have gold ETFs available, and gold traditionally has been quite an effective tool to battle inflation. The people have been investing in gold to manage or hedge against inflation. But somewhere, as you rightly said, this has recently hit the roof. But it's always a safe bet to invest in gold.
Talking about emotions, we are emotional about gold.
Yeah.
Emotions is a very important thing to keep in check when you're investing. So again, it could be in equity or other asset classes. How do we keep track of our portfolio but keep our emotions in control?
You can't. So accept the fact that we are human beings, and hence we have emotions, otherwise we could be robots. So that's number one. Money has no emotions, but it creates all possible emotions unless you are a hermit, and then you wouldn't be watching this show, right? So we have to accept that we have emotions. There is greed, there is fear, there is lust, there is frustration, there is anger, and all those things will be there. For a period of time, you would start getting used to those emotions, and you will start taking rational calls. So it's like a driver who's driving a car, and initially he will have more frustration, will have nervousness, and more he drives, he's used to a car passing by or somebody overtaking from wrong side, or some kind of turbulence is coming on potholes, etc. And that's what will happen. The only way you will be able to check emotions, you can't avoid, is with experience.
People here are investing on a retail investor, so they're investing on comparatively smaller amounts. But when we read about all these macro numbers, the inflation, IIP, GDP, all of that, how much of that, with again the rupee slide and all of that, how much is that actually, how much do these guys have to keep all of that in mind when thinking about their personal portfolio?
I think for a young crowd like this, as I said earlier, it has to be very, very, you have to be very clear about the fundamentals. And it's best to go simple. So that's where I mean, coming from a background of life insurance, I always propagate the, the vehicle it offers. It offers a wide range of investment options. It has unit-linked plans which has a right from 0% equity to 100% equity. You can invest in a purely debt fund offered by a life insurance plan, and it offers a multiple avenue to invest into premiums. It could be a monthly option, quarterly, half-yearly, or annual. So this gives you a very disciplined way of investing into a savings as well as protection plans. Life insurance plans are unique in a way because they offer protection. So although there is, you are primarily looking at a savings avenue, they inherently offer you protection.
We're going in for a short break. Don't go anywhere. You're watching NSE FinWiz powered by CNBC TV 18.